You're listening to The Whole Truth, a Resources Rising Stars podcast.
This week, The Whole Truth podcast heads off to Chile. We're going there with Ray Shorrocks, the Executive Director of Mitre Mining. Mitre has just acquired the Cerro Bayo silver gold project in Chile. This is a member of the Steve Parsons camp, to coin a phrase. It is they specialise in brownfields exploration. They sit alongside the likes of Firefly, formerly known as Orteco, which also recently made an acquisition overseas. The traits they look for in these projects are the potential to have genuine scale, existing infrastructure, and of course, immense exploration upside. Cerro Bayo ticks all those boxes in spades. There's already a substantial existing resource. There's extensive infrastructure estimated to be worth $150 million. And guess what? The drill bits are set to hit the ground in mid-January. They waste no time, these guys, in getting in, drilling holes, because they say that's where the value creation is for shareholders. Mitre Mining has just raised money. It's armed and dangerous. It has a full war chest, has drill rigs lined up, and they're ready to go. Ray Shorrocks is a terrific fella, former stockbroker. He's been around a long time, and he tells the story in a very candid, straightforward fashion, very easy to follow. I think this will be a company to put on the radar for 2024. Ray Shorrocks, what's a well-refined Sydney businessman like yourself doing walking around the back blocks of Chile?
Well, that's a good question, in fact, but what it does say is the strength of our team to be able to go globally and search out some of these really high-quality company-making assets like Cerro Bayo, which is in Patagonia. The criteria we often use, Paul, is that it's got to have size, it's got to have infrastructure, and it's got to have accessibility, and it has all three of those.
So you're obviously not the only, in this case, obviously bought Cerro Bayo through Mitre Mining,
Yep.
part of the stable of companies there that you work for with Steve Parsons and the like. Highly successful track record, but you're not the only company or companies out searching for these sorts of assets. Those characteristics that you just laid out are obviously probably on the shopping list of any number of companies around Australia and indeed around the world. So how did Mitre come to get its hands on what looks to be such a cracking asset?
That's right. Yeah, it is a cracking asset. So we got our hands on this. This started back in February this year, and the company Equus, which was the original owner of this, it was well known to us, and they had taken on some debt through Tribeca, which is publicly known, and we're very well known to Tribeca. So they came and approached us back then and said, you guys probably got the skill base to take this to the next level. One of the key criteria, we just need a little bit more money to keep it floating, but Tribeca wasn't prepared to hang in there any longer with Equus as the owners. And so they came to us to help them out and see what sort of a deal we could strike. And we did strike a deal only 3 weeks ago.
So let's talk about Cerro Bayo. Silver gold project in Chile, existing resource of 24 million ounces of silver. Now, can you do a quick calculation of what that is in gold terms? I mean, everybody knows what a gold resource is, whether it's big, small, or indifferent. What does 24 million ounces of silver mean in every man's gold language?
Yeah, that's right. It's a good question, and it is one that we need to make sure the market understands. So that equates to over 300,000 ounces at high grade of gold. So you can imagine, typically on the open market right now, you'd probably be able to say that quality of asset with what we have is probably $20. So there's 60 million val just on the gold asset if you want to do it in gold equivalent. As a walk-up start. Don't forget, this is just a walk-up start. This is what we bought for $4 million. Let me just take you through a few other things, though, Paul, that might be interesting to your listeners. One of those is when you look at the criteria and what we bought here. So just a recent transaction, which has only just come across my desk, is that SSR sold their silver assets in Peru to Homestead Silver for 60 million Aussie. They had 40 million ounces of silver equivalent in the middle of nowhere, no infrastructure, at all, and no accessibility of any great node. So it's just a resource. So that equates to about $1.30 a resource ounce. And we bought Cerro Bayo for 13 cents a resource ounce, just to put it into context.
So what you're saying is you walked off with a fantastic asset at an absolutely dirt cheap price. 300,000 ounces of gold equivalent is obviously a great starting point, but it's not, when you buy something like this, it's not really about the resource, is it? Because everybody knows what you've got there. Yes, you've paid a minimal fee on that sort of valuation comparison basis, but when you look at what you've acquired, isn't it really about how you're going to make it grow? That's what these acquisitions are about, isn't it?
Absolutely correct. So the three things here is that it's a really significant acquisition we've made here, and it's a large land holding of over 300 square kilometres centred around that mill infrastructure. So the mineralisation here is open at depth and along strike. And let me just point out some of the intercepts that have recently been got that are outside of the mineral resource. That's nearly 3 metres at 2,500 grams per tonne silver and 5 grams per tonne gold. It's 5 metres at 800 grams silver, 23 grams gold.
So they're cracking gold intersections in their own right, aren't they? That's before you even get to the whopping silver.
Yeah, that's right. These gold credits are just free.
So talk us through what is exactly there, because you've got an open pit plus the underground potential, the deeper lying potential. What was the status of, when was it last mined and how did it come to be in this state?
Yeah, so it was last mined in 2019, but it might be worth just doing a quick 1 minute history lesson here. Yes. So this all started with Core back in 1997, and they discovered this. They mined it very successfully until 2010, when Mandalay bought it from Core. And then what they did was they grew that, and they mined this very successfully until 2017, where they had 2 fatalities, where there was a leak into the lake called Laguna Verde into level 7s and 8. And there was 2 fatalities, unfortunately, there. Mandalay took the very strong decision that this had occurred and they needed to move on. 2 areas which we now own, Los Domos and Cerro Diablo, were owned by Equus. So very nearby, within 30 to 40 kilometres. And they were obviously the natural people they went and talked to. They talked to Equus, who then decided this was worth pursuing. They bought it in 2018. At a pretty good price, I might add. And what they did was they started mining the stockpiles, right? And so they did that until 2019. There was a calamity of, if you like, forces, perfect storm to our advantage, where you had, increasing inflationary pressures, running out of ore, and they underexplored this area, and that the equity markets closed down on them, and they went and got debt. The rest is history, where that's why we're able to pick it up.
That's not an uncommon chain of events, though, is it? As you say, it's a perfect storm. You see situations where, particularly in these lower price environments, gold and silver price, wasn't what it is today. And you see situations where it becomes a hand-to-mouth existence. They're desperate to feed the plant. That means money doesn't go into exploration, so the inventory runs down. It becomes just a case of trying to keep the plant fed on a day-to-day basis. The grade tends to fall off. All those nasty things happen, and next thing you know, there's a liquidity crunch, a cash flow crunch. The lenders are calling for a pound of flesh and it all suddenly gets very, very difficult. But the opportunity you've got here is obviously the anchor's been thrown out on the production side, so now you can invest in what you and your group does best, which is brownfields exploration.
That's exactly right. So our absolute strategy here is to increase this resource through the drill bit, and we'll go after that straight away. So the drills will start turning immediately. By that I mean, the 3rd week of January. So that's really exciting. We've got some really low-hanging fruit drilling to be done there. So we're very excited about what we can do on that score. You don't find these sorts of things that regularly. So we will grow the resource we will understand this ore body, Paul, then we can right-size the plant. And that's what we do so well. I mean, I just want to bring up the whole notion around Bellevue, which I know you know really well, but I'm the founding chairman of. Yeah. What we did was we understood our ore body before we went anywhere near the plant and right-sized the plant for the ore body. And that's exactly what we'll do here, because really there's a direct line of sight to 100 million ounces of silver equivalent just in this tiny little area around the mill.
The issue, as you say, right-size the plant, you see so often the tail ends up wagging the dog. We've got a plant of X capacity, X tons a year, and we've got to feed this hungry beast, and it just becomes, in so many cases, unsuitable for the ore body and what is the optimum economic proposition or way to go about it. Now, you say the drill rigs will start in January. This is really about, I take it in the first instance, just attacking those and targeting those high-grade veins or lodes, where they are, chasing them along strike and at depth.
Right, that's right.
So it should be akin to shooting fish in a barrel, shouldn't
it? It really should be, Paul. I mean, that's it's probably a little bit more difficult than that. I'm sure my geos and would be a little remiss, but it's easy for you and I to say.
Wouldn't want to downplay the skills of our great geological friends.
No, that's right. But, it's all around that Pegasus area, Laguna Verde, the mine district. The open pit that's there, it's criminally underexplored, is 100 metres from the processing plant. So I've got enough power to, we've got 14 megs of power sitting at this, and we, at best, will only need 5 megs of power. So the infrastructure here, which is probably what we should be talking about, is that it's all ready to go. We understand this ore body. I can turn on that plant tomorrow.
So we start drilling in January. That will pave the way, presumably, for strong news flow in the first half of next calendar year, spitting out assays and presenting a picture of what it is you've got here and where we're going to go to in terms of growing the resource. That's the long and the short of it, isn't it?
That's the long and short of it. And in terms of news flow, that one of the things we like to make sure that we've got a steady stream of news flow. So you'll get from us by the end of this month, the end of January, all the shareholder approvals. But we're already working on the asset. We're paying for things as we sit right now. We'll compile all of that historical data that's sitting there. There's 7,000 metres of unassayed core of some of the highest value visually that you'll ever see. And then we'll come out and compile that, and then we'll review all of the stuff we're going to do around Lake Verde and all around that other areas around the mill. Resource extension and infill on Cerro Bayo will happen next, and then we'll test our greenfield targets outside of the immediate mine area, and then we'll have 2 sets of resource updates, one in the second quarter next year and then another one in the fourth quarter, akin to the early days of Bellevue, where we came out with every 6 months upgrades of 500,000 ounces of gold. We'd like to think that we'll do exactly the same. I can certainly see, Paul, a doubling of this resource quite quickly.
Now, speaking of paying for things, Ray, you have just done, or Mitre has just completed a raising or is in the throes of the raising. So you've got the money, you've got a war chest here to fund these drilling and assaying that you talk about.
That's right. So what we have now is we raised 8.3 million. We had 2 million in the bank, roughly. So we've got a war chest of just on 10 to get this done. We've got, about a couple of $1 million for care and maintenance for this plant to make sure everything's hunky-dory. About 3 million on the drill bit. So we'll get stuck right into that. So we've got more than enough in the war chest to get our shareholders a great resource increase.
So post the raise, what sort of market cap are we talking for Mitre at today's price?
Well, there you go. So post this capital raise, post the transaction, we're going to have a market cap of 26 million with, call it 8 in the bank after paying off bits and pieces, which is a very unchallenging $18 million enterprise value. And I just mentioned to you before that, we paid 13 cents an ounce and the current rate is over $1.30.
So there's no shortage of leverage in that story.
That's absolutely correct.
There's a couple of parallels here when you're talking about, a plant on care and maintenance and that sort of thing. You're also wearing another hat, you're the non-executive chairman of Firefly, which would be known to many of our listeners as Orteco, recently changed its name. Now, Orteco, now Firefly, has done a similar project acquisition, hasn't it? The Green Bay Copper Project in Canada.
Exactly.
There's a lot of parallels here, a lot of parallels.
Like the similarities are almost ridiculous. You know, somebody else that owned it couldn't get equity, took on debt. The debt providers decided to call in their money. We just happened to be at the right place at the right time, bid quite strongly. And now we have this high-grade copper and gold in a great province, this resource, a walk-up resource of 800,000 tonnes at 2% copper equivalent. But here we also have $250 million of mine infrastructure. And the guys are using that infrastructure as we speak right now, driving down the current drive to really drill from underground. And we expect to have some pretty good drill results out in the not too distant future, almost imminently, I would imagine.
Now, Steve Parsons, the founding managing director of Bellevue Gold, has stepped into the MD's chair at Firefly. I know he's absolutely working flat out. I think he thought life might become a bit easier after he went non-exec, but he liked this opportunity so much he grabbed it. And we spoke to him on the Whole Truth podcast a few weeks ago, and he was telling us about this 40,000 metre underground drilling program. He also talks about strong resource growth at Green Bay, based on the drilling program, extending the known resource, chasing it down plunge and the like. So as you say, the similarities, the parallels between these two projects are quite remarkable. But one of the most striking ones is that both projects have no need to feed a mill. You know, they've been mothballed.
That's
and I think that's probably one of the key messages. Brownfields exploration with no need to feed a mill is a luxurious position for geologists to be in, isn't it?
Absolutely correct. So you really, that strategy is, again, understanding your ore body, spending money to increase shareholder value through the drill bit, right? Rather than building mills, trying to feed this hungry mill, not running out of ore, constantly chasing your tail. This is all about saying, okay, what is this? What do we really have? And mark my words, I think we have something quite spectacular. The results will tell the true story in the coming weeks and months.
I think there's a good case to be made for a big shingle over the offices there in West Perth that says Brownfields Exploration Incorporated.
I couldn't agree more. I don't think we're big fans of Greenfield. There you go.
Yeah, well, you can see they say that's the sweet spot, isn't it? You know, the mineralisation is there. It's a case of spending some money, putting $1 through the drill bit to make $100 or $1,000, and that's where the value creation for shareholders comes. It's a better relationship between risk and reward, you might say.
That's exactly right. Absolutely correct.
Well, Ray, we'll let you go because we know you've been flat out this week and traversing this great continent of ours, and you've been busy on 2 transactions in recent months. So thanks very much for your time, and we look forward to getting you back on the Whole Truth podcast in the new year to just see just what those drill bits are churning out.
And thank you, Paul. We appreciate the opportunity to be able to talk to your listeners.
Thanks, Ray.
All the best.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.